Okay, so let's get started now. So here, who doesn't trade before, or who is like very new to this trading? If Today my sharing is all about uh, simple technical analysis, and it's beginner friendly for those who doesn't know what is technical analysis. So to learn how to trade in the markets, usually we will start off with this simple technical analysis. So here is mainly about the introductions to technical analysis for those who are new in this investment or trading field. So first of all, let me introduce myself. My name is Ming. You can call me Charming or Ming Ge. Yeah, and just call me Ming. Yeah. So I have been a full-time investor or trader for the past 7 years, and I trade stocks, forex, cryptocurrencies, and also do automated trading strategies like using grid bots to get a fairly consistent profits in different kind of markets. So I have ventured into this education field with uSMART recently, and I do hope that I can share my experience with you all. So here I will mainly focus on beginners trading guides. So I hope those who doesn't have any ideas about technical analysis or doesn't have any ideas about this trading can maybe get some benefits from my sharings. And I do hope you all learn something together, as in this financial world we need to keep on learning in order to keep track with the markets. So actually it's not a very it's not a get rich quick scheme, and I do hope you all can learn. Even me, until today, I also still learning. So I will not dare to say that I'm a guru or what, but I'm just a person that just share with you all. If anything, you all can just drop some questions in the chat box or ask me to slow down if I go too fast. Yeah, so let us get started. So what is technical analysis? So technical analysis is a type of analysis that we use the stock price chart to look and analyze where to enter and where to exit the market. And usually we use technical analysis, we use Japanese candlesticks. So what is Japanese candlesticks? So if you all open your apps, you all can see like the charts usually come with all these Japanese candlesticks. So because here in Malaysia or Singapore, I think for the green one will be the bullish candle, and for the red one will be the bearish candle. However, for I think China or Hong Kong, the color is opposite, which is the bullish one is red color and the bearish one is green color. So here I will just focus on assume that green is bullish and red is bearish. So we can see that how to read the Japanese candlesticks, we can start off with there is a opening price. Usually the green bullish candles will close with a bullish price. So you can see the closing share price usually will be the higher, and the solid body of the green bullish candle will be below. This is the opening, and since it's a bullish candle, it closed at high. And you can see the wick is let's say this is a 1-day candle. It's the price that at that day the stock price went highest and the stock price went lowest price it can go. So same to the red one, bearish candle, is like the opening share price will be at high, and the closing share price will be the bottom of the solid candles, and the wicks will be the price that the share went highest at the day, and went the lowest at the day. So it's very easy to read. So usually when we do some when we do trade analysis, usually the main focus will be finding the trend. What is market trends? So let's start with the basic one. The market trends will be, there will be 3 market trends, which is uptrend, sideways, and also downtrend. And actually for trends, it can be very subjective. It depends on the time frame you look on. Let's say it's like this whole week it went up, but the stock price won't goes up in like a straight line. It can be goes up, goes down, goes up, goes down, and goes up, wave down, and wave up, wave down. So when you focus on the wave down, somebody, if you are doing a short-term trade, somebody can say will say that it's a downtrend. So it depends on your perspective on how you look at the trends. For me, I will mostly first I will see at a big trend, which is I use the day charts to look at the big trend. So like from day to weeks, the market price is went up. So I will assume that it's on the uptrend. Then I will buy or enter on a significant retracement. And then I do an entry. Alright, so for the big major trend, I would say that we will start off with analyze those big major trend. So usually if you want to long the markets, you want to buy the market, that when the price went up you earn, usually you want to trade in the uptrend stocks. So there will be 3 types of trend, which is uptrend, the price will go up over the time, and also sideways trends, sideways, and then downtrend, the price keep on moving lower and lower and lower. All right, and then the characteristic of the uptrend will be the high will become higher and the low will become higher, while the downtrend is the opposite. Low can become lower and the high will become lower high. For sideways, it just keep on fluctuate up and down, fluctuate in a certain range. So if you want to long a market, you try to find a uptrend stocks. So we try to, if you want to short the market, we try to find a downtrend stocks. It's just that easy. So how can we determine the market trends? So usually for the basic one, we'll start off with like plotting those recent high, and we just try to connect the dots and draw it into a straight line. Like here, you can see that the red line for the downtrend line, the lower high is getting lower, and then the lower low is getting lower. It become uptrend. When will it become uptrend? The high become higher and the low become higher. So you can say that when the high become higher from when the downtrend change for lower high to higher high, we can see that we can assume that the market trend is changing. So if the market trend change, we want to try to buy at a certain sweet spot. So to have a better entry, we use technical analysis to enter at a specific point. We don't gamble in those uncertainty areas. Technical analysis, like in trading in some sort of perspective, is also a gambling, but we try to like enters with with a higher winning rate. We don't simply enters with a low winning rate, right? So this is how we draw a trend line. So we try to find the low every time when the low hits. How to determine the low? Usually the low will hit and then it has a sharp rebound, rebound. Then we try to plot the low after it exists. So we try to connect the dots. We draw those low. We connect the low to the higher low. Then the high, we also connect the high to the higher high if in the downtrend, uptrends. So for downtrend, the high will be a lower and the low will be always low. So next will be the support and resistance. This is a very famous trading ideas in technical analysis. We try to find where is the support and resistance. So what is support? Support usually is a place of area that when the markets drops, so when the markets went up, then it retraces down, right? When it hit a certain area, it keep on rebound. It hit the area, it keep on rebound. The area, the price range area keep on reject the markets. Reject the market from falling down. So we can call it as a support. And then usually when that's for the resistance, when the market keep on hit a certain area, it keep on retrace or rebound back. When it hit, like it hit a wall, so that's why we call it resistance, right? So it keep on retrace when enter this area. So we can say that is a area of resistance. So from usually when a stock broke the supports, it got supports, right? Like support, and then when it broke the supports, usually it will retest back the supports, see whether it will become resistant or not. The support and resistance can keep on change when it being broke. It means that when this resistance, when the price broke, usually we don't chase on breakout because breakout had a lower winning rates. What is breakout? Breakout is usually when the price broke through a resistance. So in normal technical analysis, people will say that chase the breakout. Just once the price breakout, people tend to buy to anticipate that the price will continue to go up. But to be safe, sometimes it will have a fake breakout. So it means that the price break and then fall back again. So we don't do all these trades. We want the price to break the previous resistance and then maybe goes up a little while, and then for maybe 1 to 2 weeks it fall back, and then it tested back the previous resistance. See it's either become a support or not. Then we see a certain sign, bullish candle sign, and then we enter. So here you can see that based on the past NVIDIA case study, we can see that previously for the left side, there's a resistance for NVIDIA stocks, right? The stock price. Then the markets broke through, and then it went up very high. So we don't find any entry yet by that time. However, we can buy it when it retraces back to the area of previous supports. So you can see that then after it hit the previous support, it formed a bullish candle. What is bullish candle? Means when there's a very strong selling pressure, and then suddenly it closed green at that day. Alright, so we can assume that this is a bullish signal. Then we enter it at the previous resistance becomes support. When the previous resistance becomes support, then we anticipate that the price will move to test the next resistance. The price usually will move between daily support and resistance back and forth. So for the simple trading, because trading is like try to trade the price difference, so we try to trade those support and resistance. So here after we enter at the retest, we can anticipate that the price will goes up to test back the previous resistance. So in this case, you can see NVIDIA retested back the previous resistance, and then it went up to test previous resistance. It broke the downtrend line, and we also can break can draw the downtrend and uptrend line. So you can see that for the top right side, there will be a rectangles. There is a rectangles highlight there, right? You can also say that it broke through the previous resistance, and then it also fall back to the previous resistance become support because it's also the trend line also adds some confirmations. Because you can use the trend line to add to in the triangle axis to have more confirmation about this price. So we can enter it at those areas, and then we put the stop loss below the supports, and then we anticipate the price will go higher. Trend line plus resistance become supports. So this is the basics one, how we look at we use all these simple technical analysis tools. So this is another examples. You can see that it moved from bottom to up. This is called comp. Then when it hit the top, it formed a sharp reversals down and then tested back the previous support. Here we can see that there's multiple supports between all these areas. So we can assume that there will be we can try to do a plan to buy at these supports and then try to sell at previous support. However, for this is for the day resistance support. There will be also like a small support, like between there will be also a support when the price hit a certain areas, small supports or and resistance. So either you want to trade which type of time frame, it depends on you. Alright, so this is support resistance. There will be support and resistance in every hours, every day candles, and also weeks candle. So we try to find a good entry, and then we try to profit from that. So this is support and resistance. To repeat, what is resistance? Resistance usually is a place that there's a lot of when the price cannot go through. When it goes up, it always hit the certain area and reject. And then for the supports, it will also test certain area, and then it cannot continue to go drop. It cannot continue to drop. It always hit a certain area and then it bounce up. So we can plot it as support and resistance. So this is Grab Holding. It has been consolidated for the past three years. So this is week chart. It took a long time, and then we can see that it breaks out of the week charts. So usually when it breaks out of the week charts in the long time frame for investors, and then you can try to target the net resistance. However, it pretty much depends on the also need to depends to study about their fundamentals. This is just a basic simple chart analysis. I just give examples. So it's not a buy call or anything, it's just a case study. So yeah, you just study this. When it breaks out, usually the price will have a momentum continue to goes up. So here you can see that the graph broke out week resistance. So for weekly resistance is very heavy. So when it breaks out of the resistance, you can expect that there's a strong volume and buying momentum to break the share price to go higher. So we can assume that this is on the uptrend. So this is how we use support and resistance. We try to buy the support, buy at the support and sell at the resistance. Alright? We try to buy at the hour, day, and also week support. Or breaks out of the resistance and then tested back of the previous resistance to become support. So these are all possible areas, the possible targeted area. Support can also become resistance, and resistance can also become a support. Alright. So if you have any questions, please remember to leave down. If I go too fast, maybe you all can let me know. If you got any questions, can also let me know. Yeah. If not, I will just keep on continue to share with you all this basic technical analysis. Okay, another famous one. Okay, another famous one will be the chart patterns. So, one of the technical analysis, famous technical analysis will be these chart patterns. One of the famous one will be double top and double bottom. I'm sure that those if trade must heard this before. So what is double top? Double top, there will be usually there's a two strong resistance there, and then when the price break out, like when there's a two strong resistance, and then when it retraces back, it broke through the previous supports, then we can try to enter at the breakout, and then we put the stop loss above those double top and targets a further area. Same for the double bottom. There's a two strong point of support. Then when the price goes up, we plot those resistance. It breaks out above resistance above, and then when it break out, we try to enter and put the stop loss below the double bottom. Right. So this is how we use the double bottom as a technical analysis. Okay, so another famous one will be the head and shoulder patterns. This time you can see that there will be the price will fall like a V, and then for left shoulder hit and also right shoulder. Then you can see that there will be a strong resistance there above the left and right shoulders. So when it break out, you can do entry there and then put the stop loss at the right shoulders and then target the further area. Same as the inverse head and shoulders, it's just a different one for shorts. So for the right shoulder, when it break out, you can try to put an entry and then put a stop loss above the right shoulders and then target the further area. So these are one of the famous head and shoulders chart patterns that many people trade. Usually you can find these at the bottom of the markets and also at the high of the market. Then when the market want to do a reversals in the daily time frame. Another one will be the break and retest. This one has a higher probability among those chart patterns based on my experience. So you all can choose either one and focus to and do a backtest and focus how to trade the markets. Alright. So all these you all have to practice on how to differentiate the patterns, how to see the patterns. It's not so easy for beginners. However, as the time goes through, when you do a lot of backtests, yeah, you can very comfortable with it already. So for me, the easiest one to master is this break and retest. So you can see that when the market breaks a certain resistance, we won't chase it. We must be patient, wait the price fall back, and make another breakout. Then we do an entry and put a stop loss. Same as the short one will be the bearish one. Is when the price break the supports, it retests the back and then break another previous supports. Then we do an entry and put a stop loss there. Alright. And then range breakout, which is a very quite common one. You can see that the price like zigzag down, and then suddenly it breaks out. Then you can make an entry and make a stop loss there. Or it's like sideways for a long time, and then it break out, and then we do an entry. Usually I will wait sideways, break out, retest the back, and then we do an entry. So it pretty much depends on how you want to use it. But my advice will be, you still have to keep on backtest on the markets, you have to look a lot of previous chart to have an idea on how to make this your tools that favors in your trading. Alright. And then this another range breakout, which is the opposite sides. It's the same. Yeah. Alright. So we have talked about the chart patterns, the support and resistance, and also the candlesticks. Alright. Then next I will talk about technical tools. So the famous one, I will pick few famous tools, indicators to use. Actually, it's not tools, which is indicators to use. We can use it usually we can find in our app or maybe trading view. Yeah. So moving average, what is moving average? So moving average actually is the average of the closing price. Closing price of the candles. Like if the moving average is moving average 20, it's the average of the 20 days closing price of the stocks. Like if the price is going up for the past 20 days, the candlesticks will be above those moving average line. So here I've been using moving average 20, 50, 100s, and 200s. If you notice, there is E stand for exponential. Exponentials is slightly sensitive compared to this normal moving average. However, it's much more the same. But we'll use it for the EMA 20 moving average above 20. When the share price is above this 20, it means that for the past 20 days, the price is moving up. If it is below moving average 20, means for the past 20 days, the price is below, is slowing down. The price is getting lower for the past 20 days. So for 200 EMA, usually we look at it as a live point of the market. Means when the stock is on the uptrend, long-term uptrend, because the price will keep on move up and down, right? Sometimes it goes up very slow along the days. So as long as it's above this moving average 200, which is the price is getting higher for the past 200 days, we can say that it's still on the long-term uptrend. So above 100 days is like mid long-term uptrends. Above the 50 days is like for the past 50 days the price is bullish. It's getting higher. So we want to EMA 20 above 50, above 400, and above 200. So when the moving trends, like the moving average line is like the small one is above, like 220 is above 50 and above 100 and above 200, we can see that the price is very up on the trend. So we try to buy the stocks at the main entry when the 20 cross 50 in this case, because the momentum of the recent 220 is getting higher compared to past 50 days. So when it happens, we try to buy it and put the stop loss slightly below, and then we target a higher area. So this is how people use a moving average, usually mainly used to determine what is the trend of this price. What is the trend? Like for the past 30 days, it is on uptrend. For the past 50 days, it is on uptrend. For the past 100 days, is it on uptrend? Or for the past 200 days, it is on uptrend. Sometimes it can be for the past 200 days, it is on uptrend, but the short term, it becomes uptrend. So it depends on what moving average you want to use. So for the short term traders, usually they will use maybe 20 over 50 or 10 versus EMA 20, and then plus with you together with all those others technical analysis knowledge. So it pretty much depends on how you do your technical analysis. For me, I will use fundamental analysis and also technical analysis. to trade the markets. And I only use support and resistance because I trade support and resistance. So some people they use moving average, they use chart patterns, they use fundamental analysis. It really depends on how you look at the market. So technical analysis is a way that you have to discover yourself. Like you have to find like, which one suit you the most, right? So, but we still have to learn the basic first before we go into the deep one. Another famous indicators will be this relative strength index, and we can combine it with a moving average. Sometimes we only use a simple moving average. And for the relative strength index, it means that the momentum, it can determine the momentum of the stocks. Usually we try to buy it below 30 and above 70, and sell it above when the relative strength index above 70. Below 30 is oversold, and for above 70 is overbought. So here we can see that the price hit the moving average. We try to buy the moving average uptrend when the price retraces and hit the moving average, and then we can see that the relative strength index is below 30. So it will be it has a confluence. We call it confluence. Like there's the two reasons for you to do this trade. Right. So this is a long-term moving average, and then this RSI hit below the oversold. So you can consider to buy at these stocks. Usually, for long-term investor, we will try to wait the stock price retrace to 150 or 200s, and then combine with the relative strength index, then we can try to buy, try to scope the share, right? So this is how we do entry. So I discussed this. I talked about this RSI moving average. Actually, there will be one MAC called indicators called MACD, but here I don't think I will share with you all because there will be a lot of stuff. Okay. I think this two is more than enough. So yeah, just continue. Let's continue to talk about the volume. So for the volume, usually we'll read the volume. How do we read the volume? So for the volume, there will be the when the volume is high, the price will goes up, and then the price is bullish. When you see the volume going up and the price goes up, we can say that the stock price is bullish. And then when the volume goes up and then the price went down, it means many people is selling, and it can be very bearish. And then for the volume, when the volume price goes down and the price goes down, we can assume that the buying pressure diminishes. It means that we can say that the share price started to slow down. The selling started to slow down. So we can wait and try to look at it. That is it the time to make an entry? We can wait for a better. We can start to monitor the markets already. All right. So for the volume, when it goes down and the price goes up, we can assume that the selling pressure diminish. Means there's less people selling and the price goes up. And when the volume goes down, the price goes down, the buying pressure diminish. It really depends on how you read the markets and how you understand it. Alright? So all these we have to like try to pick few one. It's not that you have to combine all these, but you try to master it one by one and find which one is easy for you to spot, and then you try to combine it, and then you make the trades. Alright. So lastly, this is a slightly advanced one. That will be we need to know what is the market structures. So usually market structures comes with accumulations, markup, distributions, and markdown. What it means by that? Accumulations means when the price is usually at the sideways, and then markup is when the price start to move up to attract more investors in, and then it distribute. It distribute means the price goes down, and then it distribute at the high, like accumulate at the low, going up, sell the sharks, the big shark. I mean maybe the big player, they started to distribute and then mark down and then sell down. So all these cycles keep on repeat in big or small time frame of the markets. Then we have to know that we try to buy at the accumulation phase, we try to sell at the market phase. We don't want to buy at the distribution phase and then get caught at the stock's high price, right? So we don't trade the small time frame. So all these we just have to know the big picture of where is the market in. Okay, I just give another example on how you all know where is the market right now. Okay, the market behavior cycles will be the AMDM. Just now I mean accumulations, markup, distributions, and markdown. AMDM. So this will be the last. Slide I will share with you all, and this is very important. Many people don't know how to. This is how we read about the big picture and long-term pictures about where is the market now. So here, can every one of you or maybe any one of you all can say that which phase are we in now? That in this market behaviors cycles chart, we can see that there is smart money phase, sell phase, awareness phase, and mania phase, and also blow off phase. So where are we in now? So we don't know the top. It's very hard to know the tops, but we need to roughly know where are we traded or where are we invest in the current markets. Any guess? No. Okay. Then I will continue to share with you. So if you all can see that usually when the stock's price or the market start to goes up, it usually started with sell phase. When is the sell phase? Usually the sell phase comes from the previous bearish cycle. It means that the price drops a lot until people doesn't have any confidence to go into the markets. Let us take Nvidia as a examples. Usually when during the sell phase, I think Nvidia around, let's say $10, it started to take off, and then the normal retailers won't get in at that low. Alright, then it started to went up, and then institution trade investors or traders will try to get in. Then there will be a first sell off. Then usually people won't notice that much about these stocks. Then this phase will be the awareness phase. But at this time, maybe the stocks already flipped from like 10 to 30 or 40 or 50 already. And then when normal investor or traders, they look at it, maybe they will feel that this is very high already, like from 10 to 50. Then it keeps on going up until caught media attentions. And then when media reports all these stocks, famous stocks, usually the price will be slightly like maybe higher more, around 70 to 80 or 90. That is where retail start to get in, but not as many as at the later price. So from here we can see that from this media attention, you can see that we are in the mania phase, or on the way to the mania phase, or we are over the mania phase. I also cannot determine the top, so we don't know the top because the high can go extremely high and high. So, but however, we still need to aware where are we in, where our phase, we buying in at which phase. So if we know that we buy in this phase, it means that it's not good that we go all in at this phase for long-term investor. Here I mentioned long-term investor. If you trade, you can just trade a short-term time frame, so it won't matter to you. However, if you invest for a long-term trade, you have to know where around which phase are you in now. So from the media attentions, enthusiasm, and public, I think we are over this phase. However, this is just based on my perspective. Alright, at least I know we are in this phase, or over already, or maybe near the blow off phase. So this is very normal cycles. So we have to be careful. We have to do the risk management in trading or investing. When it drops, we continue to drop. We continue to add. When it goes up, we need to take profits or what. So you don't, you know how much you can afford to lose, to cut, or you intended to hold. Even it drops a lot, you have the spare cash to add. All this plan you have to decide yourself. So trading is not that easy. I would say that trading is the easiest way to earn hardest money. It's the hardest way to earn easiest money. Trading is not as simple as that. So same like investing, all you need is the discipline and your knowledge about the markets. So usually it comes when it goes up, greed, delusion, new paradigm, denial, return to normal phase. Then you started to go down. Then many believers still going to buy, and then lower low and higher low will comes, and then in the end usually will comes with capitulation. Capitulation, what is capitulation? Capitulation means the price can drop like very fast, like maybe more than 50% in 1 to 2 weeks, like crash. Basically we call crash. Then crash, it will continue to drop, and then the volume will slow down, and then it stay at the bottom for very, maybe usually the bear market will be 1 to 2 years, or even more than 2 years. 1 to 2 years, maybe 1 to 2 years, yeah. So, and there will be a chance that there's a certain stock can, even the next bull market comes, there's a certain stocks will not come back. So we try to buy those quality stocks or ETF to be safe, so that the price still can come back in the next phase, bull phase. Some stocks, they will never come back, right? Some shit quality stocks will not come back. So we always need to invest in a good stocks. All right. So this is roughly an idea. So we have to keep on study this cycle. So we know that where are we in now. So we need always to have a good trade plans. We also need to have a good risk management on how to tackle this market. So we won't feel very emotional, unstable when the markets like goes up or goes down, goes up or goes down. Alright, so this is today's sharing about how to technical analysis in stock markets. Maybe it's a little bit a lot of information, but this is how I can share with you all in such a certain amount of time. So it just I just want to give you all a spark of idea on what knowledge can you find in this technical analysis, so you all can go through and study yourself by using maybe YouTube, all those free. There's a lot of free knowledge in the internet. Yeah, so I do hope you all learned a lot today, and if you all have any questions now, feel free to leave down and I try to answer. So for those who has WeChat can add me in WeCom, and I just open a Telegram, but there's no peoples there. So maybe you all can consider to join the Telegram, and then we can see that in the futures we can give make a community, and then maybe share more knowledge in the Telegram in futures. If you all feel my sharing is good, please share with your friends next time and ask them to join this live webinar. Any questions? Any questions? If you all don't have any questions, I will end my sessions here today. All right. No. So before I end my sessions, here is the disclaimer. And just now what I mentioned is above, it's just for case study only. All right. So if you all don't have any questions, then I will end my sessions today. And thanks for listening. I do hope you all learn some new knowledge here, and hope you all earn big in the market. Have a nice day. See you all. Thanks for supporting.